Vitale, American Retirement Advisors, and Vitale Wealth Management, as you can see, giving you the Gradient weekly market updates. All information is gathered as of May 20th, 2024. We're going to get into this in just a little bit. Let's talk about what happened in the week in review. Inflation data was mixed last week, with the consumer price index in line with expectations, while the producer price index was a little bit higher than expected. Markets, however, treated this as relatively welcome news, as it provided some evidence that trends were worsening significantly. Bonds were up for the week as interest rates declined and stocks rallied across all segments. Remember, when the interest rates go down, bond values go up, and we've been seeing kind of the bonds still not doing so hot. So that's a welcome sign there. Upcoming economic release, a relatively slow week of reports, but the Federal Open Market Committee, FOMC, the minutes will be released on Wednesday, which was yesterday, which will provide some further indication into the Fed's trajectory on interest rates, which basically, we're going to talk about that next week, but they're not going lower anytime soon. So higher for longer, that's happening. So look at the market outlook. After some consternation regarding the state of the consumer, Walmart reported earnings that beat expectations, and in commentary suggested that consumer remains relatively resilient. Given conflicting reports, it can be difficult to look at consumer trends based on Walmart, Chipotle, and Costco. It'd be difficult to see a weakened consumer. We are hearing some people, though, that they think we're in a recession right now, but it's not showing it, but we'll get into that. On the other hand, below expectations retail sales data combined with below expectation reports by Starbucks and McDonald's did show some softness. Gradient's opinion is that the consumer, as a result of inflation, is being more selective, but is not in significant pullback mode. We will continue to watch for consumer trends, as it does have significant effects on the economy, of course. So they keep watching and see what we're doing, but we keep going higher and higher. Let's talk about recent activity. The G50 portfolio, we did sell Microchip and Dover to purchase Pfizer and Xcel Energy. So remember, every quarter, a lot of our holdings, they rebalance to make sure. And Cisco, which is not owned at Gradient, provided an earnings report that beat expectations, but guidance for the following quarter was a little lighter than expected. Cisco revenue was better than expected, but still had the largest drop in year-over-year growth in 15 years. Home Depot, however, which is owned in the G50, reported numbers that did beat expectations on earnings per share, but were light of expectations on revenue. The company is guiding to an overall decline of 1% in same-store sales, as shoppers have postponed larger products due to higher interest rates. And Lowe's also reported, and Lowe's also showed that it was about right, so it wasn't as down. So, we're still seeing a little resilience, but a lot of the economy, people are starting to say that we think we're in a recession just because of softening. The reason for that is inflation is still very high. The cost of goods and services are still very high, and people are feeling that. Even though the stock market keeps going up, we're seeing that. So that's what we're seeing. We still think we have going higher. They're calling for the S&P to get up to about 5,500, which is not too far away, quite honestly. So that's good. We're seeing growth, but we're also seeing some caution, which is why we have to be properly allocated. Now, let's talk about some other news. Vitale Wealth Management, we're so grateful for all of our clients. American Retirement Advisors, which you know is my company. We actually are transitioning more to Vitale Wealth Management for the sole purpose of we brought so much more to the table, and we're continuing to learn on tax strategies, on income strategies, making sure we're looking ahead to protect and preserve your wealth. So we had this transition, and we're just so excited for it. Everything stays the same. Nothing's changing. The custodian's still going to be Charles Schwab. We actually were forced into that transition when they bought TD Ameritrade. But Vitale Wealth Management, we're doing some new rebranding right now. We're redoing our office, so you're welcome to stop by. We're going to have that all done pretty soon. And really excited about that. Feel free to give us a call for any questions. But that's it for this week's market commentary. We look forward to seeing you again next week. God bless you, and we'll see you soon.